Tuesday, January 29th, 2019, Monaco 64, home of alternative economics and contrarian views. Before I start this video, I just wanted to say if you enjoy the video, make sure you hit that like button. If you're not a subscriber yet and you'd like to subscribe, hit the subscribe button. And for everyone, make sure you hit the notification bell to be notified of all my videos. I make one video virtually every day of the year. This morning, I want to talk about the technical picture for the price of gold and the dollar index and how they're looking. I'll also look at the gold-silver ratio and the Dow-gold ratio, and to see what the market's looking like in the medium to longer term, what the bigger picture is. As always, what I do is dollar cost averaging. I buy, whenever I can, physical gold and silver as a protection. I've been doing it since 2002. Of course, back then, I just bought it because I wanted to try something new after the dot-com bubble burst. My wife and I talked about it and said, why don't we buy a few gold coins? And then I started looking into it and what it really was to own physical gold. I use gold investments in London to buy my physical gold, my bullion and silver. I've used other dealers before. Gold investments right now, though, provide me with a promo code Monaco64. This promo code gives you 0.5% discount on all bullion purchases, gold or silver. You can do it online or go there or on the phone. Gold Investments is arguably the oldest bullion dealer in the city of London, and it's family run. So before I look at the technical picture today for gold and the dollar index and the cycles, I'll quickly look at what the markets are doing this morning. Yesterday, the stock market dropped, I think a couple of hundred points, the Dow, so not a great day for the stock market. It's just before 8 a.m. So right now we've got spot gold up $4 at 1307.50. We're right near the highs here, actually. The low's been 1302.20, so we've held 1300 overnight. Silver is up 10 cents, or 0.2%, and gold is up 1/3%. So silver's kind of outperforming a little bit. It's at 1584. The high has been 1586, the low 1570. The Dow future is down 90, or 1/3% at 24,436. S&P 500 future is down 9, or 1/3% at 2635. The NASDAQ 100 future is down 0.5% at 6666, all sixes. The pound is drifting lower again this morning. It's down 0.2% at 131.37. I won't even talk about Brexit right now. There's so much going on. I guess they're going to have another vote on the 14th of February. They call it the, I forgot what they call it, the important vote or the significant vote on leaving. The euro is unchanged, above 114, 114.34. The dollar yen is down 0.1%, 109.24. And dollar yuan is at 675. Normally lower, not that much though. WTI crude 52.14. The yield curve. Let's have a look at the yield curve. The 10-year yield is down about 1 basis points at 273. The 1-year T-bill 259. TB yield. The 5-year T-note yield is at 257. So it is slightly inverted, the curve, about 2 basis points. So I want to talk about the technical picture for the price of gold. It's starting to look good. gold, the gold price. As I said, yeah, it's the fiat price of gold. And what it means is that the dollar is dropping against gold. Gold is, as we know, longer term and very, very long term. The function of gold is to give you stable and purchasing power. It maintains its purchasing power. There's the old saying or the old maxim or rule that 1 ounce of gold during Roman times could buy you a very, very nice toga and some sandals, while you know, nowadays it should be able to buy a very nice suit and a nice pair of shoes. I mean, if you had a you know, and this is hypothetical, of course, if you had $100 Federal Reserve note in Roman times, it probably would have bought you a lot more, and nowadays it doesn't buy you that much more. So that's how to look at it. But it's interesting to look. Some of you might want to trade. You know, even though you do have physical gold, you might want to trade, and that's up to you. I've done that before. At the moment, I'm not really trading, but I like to look at the technical picture and the fundamental. The fundamentals is a different story. I'm not going to talk about that today, but they're looking good too. So let's go to the gold price first. Let's go to a daily chart. So as you can see, it had been very frustrating up until, you know, like last Thursday. Gold had been, you know, had run up really nicely since the, let's say, wow, I mean, since August, when we made that low at 1160. It hasn't been a straight line, but it's been a very good move, and especially towards the end of the year where we moved towards 1300. But then it all stalled, and we had what in technical analysis is called a consolidation, and it even looked like we're going to break down below that 1280 level, but it held. And now it's looking good. And for the last few days, we've been testing like 1305. That was the level. But this morning it looks like it's breaking out. And you can see this chart goes back all the way to 2016 when we had the post-2011 high of around 1375. We had a high last year also, just about $10 below that level. We had like a double top there, 1366, excuse me. So now it looks very clear. That is, I think, the magnet to which the gold price has been, you know, pulled towards is that 1375 level. That will be a massive level. And that's the only thing to look at right now in the short term. And if we break that, then we'll look and see. I don't want to get ahead of myself, or I could be wrong and we could drop back below 1300. That is a possibility, and technical analysis is all about probability. But right now, it's looking very probable that we could continue to go higher in the price of gold. What's my background to talk about this? Well, I worked for over 20 years as a futures and options broker in the city of London. I advised institutional clients. I did several courses that my firm sent me to on technical analysis, options, everything. And I did my own study. I learned from my older colleagues. That's how you do it. When I started out early on, I had a colleague. He used to take levels, support and resistance levels every day. He taught me how to do it. That's how I learned it. So the other chart that I wanted to look at is the dollar index. Dollar index, of course, is made up mainly of the euro, the Japanese yen, British pound or sterling, Swiss franc, Canadian dollar, Swedish krona. Major, you know, G7 currencies, so to speak. Before the euro, it was made up of all the different, you know, Deutschmark, French franc, Dutch guilder, and so on. But first I wanted to show you a very long-term chart of the dollar index. The dollar index was started being compiled in 1973 when because the dollar was taken off gold in 71, but it was only in 1973 that the dollar was floated. The exchange rates were floated against each other. So they, it started at 100 in 1973. On this chart, you can see they go back to 1969 because you can go back. Even if you started from 1973, you just look at the different currencies before 1973. But one thing, and I've made videos about this, is that the cycle in the dollar index seems to be about a 7 to 9 year cycle, so roughly 8 years. And I'll just show you here. Back in 1978, we made a significant low in the dollar index, just above 80. And then it rallied all the way up until 1985. So that took about 7 years. And then after that rally, the dollar bottomed in 1992. So that's another 7 years there. And then from 1992 to 2001, that was about 9 years where it topped above 120. And then from there, 2001 to the low in 2008, just above 70. That was another 7 years. So we went back to the 7-year cycle after that 9-year cycle. And then now, this is what I spoke about a few months ago, 2008 to 2017, beginning of 2017. That was just almost 9 years, just under 9 years. And we topped at 103.82. And yeah, and this has been 2 years already. We haven't, retested that high. Right now, it looks like it's forming a top. And this is a quarterly chart. It looks like we could see, could be in another 7-year or maybe 9-year or thereabouts cycle from 2017. That would take us to around 2024, maybe 2025. So it's not going to go in a straight line, of course. All the cycles are different. So let's look at a shorter term chart of the dollar index. So this is a weekly one going back to around the, 2.5 years. And as you can see now, it looks like we're forming like a head and shoulder here. Formation. I guess the key level now on the downside will be 94 for the dollar index. Does that mean that you should hedge yourself by being long the euro, Japanese yen, sterling? Not necessarily, in my opinion, because as I've said before, all the fiat currencies are gonna, they will sink and they take turns. And gold will be the top currency. I mean, if we look at the dollar index, when it bottomed in 2008, that's when gold topped just above 1,000, 1,031. So even though the dollar index is going from just above 70 in 2008 to a level now of around 95, gold is $300 higher since that bottom in the dollar. So this just goes to show how the bull market in gold is very strong, because you would expect gold to be below 1,000 here because the dollar has gone from 70 to 95, but it's not. So hold on to your gold and silver. And just wanted to show you as well the gold-silver ratio. Recently, it's been at very elevated levels. And 80 historically is a very elevated level. That just means that gold is outperforming silver. The higher that ratio is. But recently, and this is encouraging because in all the major bull markets in the precious metals, silver has outperformed, and we want to see that. We want to see this ratio go down. And right now it looks like that's happening. We're forming like a massive head and shoulder here. And the key level, of course, is going to be, well, right now it's around 81.5. So we need to break that level, and then 80. But that's also telling me that the technical picture for the precious metals and gold is looking pretty good. The other one is the Dow gold ratio, which is basically the price, how many ounces of gold you need to buy one Dow index. And what does this tell you? It just tells you how, you know, tangible assets as represented per gold are performing against paper assets as represented by the Dow. We topped in October around 22.5, and we've been going down ever since. Of course, it hasn't been a straight line as the Dow has, you know, as the stock market has had counter trend rallies. You know, that ratio has risen, which means the stock market has outperformed. But now, as you can see, it looks like we're going back down. And yeah, that's another signal pointing to outperformance by precious metals against financial assets. So we've looked at a few charts and things are looking, you know, pretty good. Does that mean they will happen? No, but there's a good probability. That's what it's all about. Thanks for watching. I hope you enjoyed the video and you did hit the like button. I wish you all a great day, and I'll talk to you later. Take care. Bye.